right? So, first and foremost, right? For those of you who don't know me, my name is Shannon. I have been in this industry for coming up to 5 years now. It'll actually be my 5 year anniversary at the end of this month when I joined my very first trading company. And what I'm most excited for with Primeverse, in my 5 years in this industry, I've always paid a subscription, right? Every single month for the last 5 years, pretty much, apart from, a few years in between where, got sidetracked and went and did, a few crypto things, right? Apart from that, I've pretty much been paying a subscription for the last 5 years, okay? Drop a three if you've been in a trading company where you've paid a subscription. Drop a three. If you've been in a company where you've paid a subscription. Okay, cool. Right, it's going to be quite a few people, and it's going to be, quite a lot of people who have joined with me. We've been together in a trading company, right? And I would say in the last 5 years, for me, it has been one of the best opportunities I came across because there are people who've paid thousands and thousands in courses. Maybe it was $1,000 course that literally lasted a week, right? So the subscription model, was revolutionary, right? And the one of the first biggest companies to do it, I just seen Gareth put I Am Academy, they were one of the biggest companies to do it because they were one of the first. It was people didn't have access to that kind of information, but the industry is changing. And I am so excited for Primeverse because number one, it's completely free. Never again will you have to pay a subscription. But what excited me even more was it actually has the same, actually, if more value, right, than what some trading companies out there have today. So this isn't, I'm not, most of you are in Primeverse, so we're really focusing now on getting you making money as quickly as possible, but also getting you into good habits, okay? Because sometimes what comes with free is you thinking it's not going to have much value, or maybe you being a little bit reckless, right, when it comes to your trading. So I want to make sure through this boot camp, and by the end of it, you are fully equipped. You feel super confident, right? Especially for those of you who are brand new to trading, you actually feel confident in what you're doing. Okay, because sometimes, when we first start, you get maybe thrown into a group chat, you get thrown into, this, that, or the other, and you have no idea what's going on. Okay, so this weekend is hopefully, right, going to alleviate that. Okay, and Gareth, yep, you're not wrong. You're not wrong. Um, so just very, very quickly, I'll introduce myself because I know some of you definitely don't know me personally, or we've connected, through social media. So you don't necessarily know all that much about me, but I used to be a high school English teacher. I taught for almost 13 years. Um, and it was, kids are great, right? I'm never going to complain about my actual job because I love teaching, which is why I love doing boot camps and calls like this. But the hours I lived in the UK at the time, and the hours I was putting in, the overtime I was putting in, I was constantly stressed, constantly wishing for the weekend. How many of you, and it wasn't until I actually kind of got into the trading space and saw there was other options, but how many of you are constantly like, it comes to Sunday, you're dreading Monday morning, first of all, but as soon as Monday comes and you're at work, you're wishing for Friday, right? Every week it's this cycle. You're wishing for Friday, you're wishing for your next holiday, you're wishing for that long weekend, you're wishing, for a public holiday. It's like you're constantly wishing your time away when actually time is the most precious thing we have, right? Time is not finite or infinite. It's not infinite. It is finite. Sheesh, I'm an English teacher, right? It's finite. We only have a certain amount of time, on this planet, and we're forever wishing it away. So one of my biggest achievements, I would say, is that in this industry is, not necessarily the amount of money I've made. I've hit positions where I'm making multiple six figures, 6 figures in my trading. I've made money, and that's great, right? But it's when I got to retire. When I left teaching, right? In 2024 last year. Prior to that, 6 months prior, I'd gone part-time because I'd already kind of replaced my income, but I didn't want to fully, step away until I've been was super steady. Okay. But when I got to retire, that for me was like the best feeling ever because the following week, when all of my colleagues were going into work and setting their alarms and dreading getting up, I was still warm and cozy in bed, right? So that for me is why I'm so excited and passionate about Primeverse because number one, it's going to give opportunity to people who maybe could not join those trading companies in the first place. It's going to give opportunity to people who maybe couldn't afford to continuously pay those subscriptions without actually seeing as much of a return, right? But what I really want you guys to get from this session as well, and we're going to do a little snippet here, is for you to start thinking about some big, big goals that you have that trading could help you achieve. Okay, because that's what this industry allowed me to do. It allowed me to actually start dreaming, but also knowing I could achieve those dreams because I now had a vehicle and I had a skill and skill sets, I should say, where I could do it. Okay, so let's actually get into it, right? First and foremost, okay, now's the time to start taking notes. Okay, just a quick introduction. Now, for some of you, this is going to be, what do they call it? Revision, or, yeah, that's what we say in the UK, right? For others, okay, hopefully this teaches you something. But I have had this question a few times in the last, just in the last week for people who are brand new to trading. And I just want to, from this, make the distinction between trading and investing. Okay, because when we're trading, okay, as Forex traders, we are buying and selling currencies at the right time for the right price in order to make ourselves a profit. Now, what that means is, and this is where the question came in, well, why would I want to sell gold, right? Surely the value of gold coming down is a bad thing. Yes, it is if you're investing. If you've bought yourself a gold bar and you've had it sitting there for a year, obviously you're going to be a happy bunny because when I first started trading, I think the value was gold was about $1,500. Now it's at about 4,500. Okay, so when you invest into something, if you actually invest into Bitcoin and you've purchased Bitcoin or XRP or gold or silver or a stock, then yes, you want to see the value of that rise in order for you to make profit, right? And it's something that you're going to hold for the long term, right? If you got a gold bar, you ain't selling that baby anytime soon, right? You're going to wait for gold to continue to rise, right? But as traders, we can capitalize on those pullbacks, right? Because the market is constantly moving in waves. It can't just shoot up linear the whole time, right? Bitcoin can't just keep going up and up and up and up and up. Okay, at some points it has to come down. The market kind of rebalances itself. Okay, and obviously in the academy you'll learn a lot more about that. Okay, but as traders, we're just looking at, okay, in the next 5 minutes, in the next 1 hour, in the next day, where is the value of that currency or commodity, whatever it is you're trading? Is it going to go up or is it going to go down? Okay, now I don't like to say the word betting because we're not betting, it's not gambling, but essentially you're anticipating, okay, or you're betting in the next however much time is the value of gold going to go down? Because if it is, I'm going to take a sell position. Okay, do I think the price is going to go up? If so, I'm going to take a buy position. Now, this is for me one of the best parts about Forex because Forex is literally recession proof. It doesn't matter whether a stock is plummeting. If you take a sell position on that stock, you're going to make money going down. Okay, so just to make sure everybody fully understands that when we're buying and selling currencies. Okay, but also it is the largest financial market in the world. Okay, now this statistic on here is actually old because it says $6.7 trillion are traded a day. It's actually closer to $7.5 trillion at the end of 2025. So what you have decided to embark on isn't some like small little thing. It's not some, Forex influencer you've seen on Instagram and they're the only person in the world making money from this. This is a huge industry. Okay, this is why the banks, are as rich as they are. Okay, because they are constantly, influencing the Forex market. They're the ones, okay, who have so much in this. And up until I would say about 5 years ago, where trading companies started to make, I would say trading a little bit more mainstream, okay, um, banks really dominated this industry, huge hedge funds with multi-millions. Okay, but people like us now, we can take a little crumb, right? Drop a one if you just want a crumb of the 7.5 trillion. I'll take that. Okay, it can be $1 million crumb. That's what I want, but right, but I just, give me those crumbs. That's cool. Okay, it's a global market. No matter where you are in the world, you can participate in this as long as you have Wi-Fi. You just or a smart device. Okay, as long as you can operate a MetaTrader 5, then you can trade. Okay, now I'm going to go through the operating hours on the next slide. So let me just move on to the next one. Okay, so just some things for you guys to note. There are four different trading sessions, okay? Effectively four different markets, three sessions, okay? Because we kind of put Sydney and Tokyo together and call it the Asian session. Okay, but those are the four major stock markets in the world. So you've got Sydney, you've got Tokyo, you've got London, you've got New York. Now, what you need to know based on which country you're in, okay, whatever your time zone is, what kind of market are you in at the time? So if you're wanting to trade in the evening, US time, I'm in St. Louis right now, so it is currently, what time is it? Like 4 something p.m. Okay. So for me to trade Asian session, that's actually for me more preferable because it starts at 5 p.m. my time. Okay. 6 p.m. EST. So again, you're gonna need to convert here. Okay. But Asian session for me is in the evening. Okay. And for you guys might be like first, I don't know, whatever, first thing in the morning or, middle of the night. So you don't even actually, trade Asian session. Okay. Then, of course, you've got London session, which starts at 8 a.m. UK time. Okay. Which for me, I don't trade the beginning of London session because it's 3 a.m. for me. Okay. And then you've got New York session. Now, London and New York are the main trading session, right? Especially the overlap between those sessions. The reason being, that's where you've got your, let's say when New York session opens, your indices like US 30, NAS 100 being traded more frequently. That's where your major pairs are being traded. So London session would be your euro and your pound. New York is your US dollar, well, Canadian dollar, not so much. Let's be real. Okay. Um, but that is where the market tends to move a bit more quicker. You sometimes, a lot of people think they can get kind of like smoother entries. They can be in and out a lot quicker, right? If you've been seen the signal channel, you'll see gold just popping off, right, all the time. And it moves super, super quick during these sessions, which is why sometimes, and we're going to talk about that Telegram channel, it can seem a little bit intimidating because sometimes there's actually so many trades coming in there. You're like, oh my gosh, like it moves fast. Okay, but just so you guys are aware, now something to note. This is important for those of you who have already started trading. Okay, there is something called spread hour. I put that up in the top left-hand corner. So spread hour is the 1 hour during the day where the market closes. Okay, so this is at 5 p.m. EST. Okay, 10 p.m. UK. I put those as marker points. So if you're in another time zone, you can kind of figure out based on that. And it's closed for 1 hour. So between 5 to 6 EST and between, 10 to 11 UK time. If you're in Europe, that's going to be like 11 to 12, so on and so forth. So just a little note, okay? If you decide to take a trade on your own, let's say you're on the scanners or you're wanting to take your own trades, avoid taking trades before spread hour. So if the market's closing in half an hour, not the best idea to take a trade. You want to wait until after the market opens back up. The reason being, and why they have nicknamed it spread hour, is because during that 1 hour, the spreads on brokers open up really, really wide. Okay, now who can tell me, maybe someone who's already watched the beginner stuff, what is the spread? When I say spread, what do I mean? Right? Because there's probably going to be people who are beginners who don't actually know what that means. What's the spread? Can anyone tell me in the chat box? Boop, boop. Nobody? Nobody got that far yet in their education? That's cool if you haven't. This is a beginner's class. So a spread is essentially the broker's fee. Okay? So the broker, whenever you take a trade, okay, whenever you take a trade, there's always going to be a small portion of that that goes towards the broker. That's how brokers make their money, right? So difference, okay, so yeah, difference between the buy and the sell prices. Okay, that's called the spread. And that's also the kind of cut that the broker's taking. Oh, I didn't, sorry. I felt like I was waiting forever. I didn't want to sit here like a lemon. Sorry. Um, but what happens is during the day, like when we're trading regularly, that difference is very minuscule, right? Like you're not going to notice the difference when you're taking trades. But when spread hour comes, you will see on your MetaTrader 5, it opens up massively. Now, what can happen is when the spread opens up, it could take you out of a trade prematurely. Let's say you had your spread at break even, for example, might take you out of that trade, so you're not going to make any money, but then after the, market like opens back up again, it flies in your direction, right? That's always super annoying when that happens. Okay, or depending, where it takes you out, it might actually take you out in a loss, and then again, market ends up going your way. Okay, so just something for you guys to know. Also, when it is spread hour, you can't open or close trades. Okay, so the other reason I mention this, if you are in the UK and Europe, and I used to, when I was a teacher, I went to bed early. So 10 p.m. UK, I wasn't staying awake till 11. Okay, so I always tried to close my trades before spread hour. Like if I wanted to take partial profits or I was wanting to close a trade, because you cannot do it during spread hour. It won't let you. So don't ever panic and be like, oh, why can't I take a trade? Or it's not letting me close. It's likely that you're just doing spread hour and you just need to wait. Okay, so let's actually keep going. Drop a one though, if that makes sense first, right? Hopefully that part is relatively easy. I'm gonna try and, buzz through the rest of this, okay? Because there's honestly so much to cover. It's crazy. Okay. So let's keep going. So next, right? What do you actually need to trade? And I'm not talking about a broker. Obviously, you do need one of those. You're gonna need your MetaTrader 5, okay? But there's something that you need to be successful. Keyword there. Can anyone have a guess? Right? So if it's not your broker, it's not your MetaTrader 5, it's not TradingView, all those things. TradingView is secondary. Okay, Brandon, there we go. Ding, ding, ding. Okay, mindset and trading plan is also going to be one of them. Okay, your trading psychology is going to be the most important part to you succeeding in trading. Okay, in Primeverse or in honestly in any trading company, okay, copying trades are easy. Okay, and if you've been in the Telegram group, you've seen the amount of trades that have been sent this week and what the win ratio was. Like, it is pretty much impossible not to be profitable. Okay, and I'm going to show you the statistics after. Like, if you are not profitable this week, it is because of your trading psychology. It is because maybe you're switching up your lot sizes, or you were taking trades when you shouldn't have because you lost one and then you tried to win it back. Okay, your trading psychology will make or break your success in trading. Okay, and the reason why I'm starting with this before we even get into how to take a trade is because this part, okay, is the reason why I've seen so many people quit trading in the last 5 years. Okay, so when I say trading psychology, it's your mental state. This is the actual definition. Your mental state and emotions that determines the success or failure of a trade. It's not the market, it's not the signal, it is your emotions that will determine the success or failure. It represents the aspects of a trader's behavior and characteristics that influence the actions they take when trading. Man, so let's boil that down even further. Okay, I want you guys to tell me, what two main emotions do you think are going to influence someone's actions the most? Okay, first two emotions that pop into your head. Okay, good. You guys, I've said this before, haven't I? Yes, those are the two. Okay. Fear, number one, and then greed. Okay. And you could be fearful for all different reasons. Okay. So again, let's kind of go, anger and desperation are definitely emotions too, right? Okay. Over leveraging, 100%. Okay. But let's drill down even further. Why would someone over leverage? Like, what could be happening in someone's life? Right? We're all adults here, right? Lifes sometimes. Like sometimes we have stuff happen to us. So, what might affect our emotions when taking trades? Right? What could be happening in someone's life that causes them to over leverage or feel desperate during a trade or feel fearful? Okay, if they're stressed. Okay, maybe work is stressing them out and they just get kind of, I've done this before. Okay, when I was teaching and I taught teenagers, right? So if I was having a particularly bad day and the kids were really ticking me off, I sometimes enter trades just because I'm like, let me make money, right? And I should really close the trade because I'm in a loss and I shouldn't have taken it in the first place, but then I, take another one. Okay, so there's loads of things. Yes, Eliza, they need money right now, right? So maybe they've started trading with their last like $500 in their savings account and they need to pay rent or they need to pay their bills and they're hoping that trading is the way out. Now, trading is certainly, and especially now that Prime versus free, is definitely going to be a way that you can generate a good side income, but should you ever put your last pennies in a trading account? Absolutely not, right? Because it will affect your trading psychology. If you have to win a trade in order for you to be able to pay for something, you should never be trading in the first place. Okay? Lindsay, yeah, bills, relationship issues, stress. Good. There's so many things that contribute to our trading psychology. So it's important that we're aware of these things. Like I very quickly became aware, like I can't actually trade. Like I lost so much money while I was trading at work that I was like, that is just stupid. Just making stupid decisions, right? Trades I shouldn't have been in, too many entries, over leveraging, just because I was like stressed and pissed off at work. Okay. So you need to know when to put your phone down or delete your MetaTrader 5 if you need to and just take a break. Brandon, that's a real good one. Getting a bit cocky. Maybe you've won the last 10 trades in a row and your account's up like do you know what? 200%. My account was up about 160%. And then me and Bitcoin, we last weekend we got in a fight and I lost. Okay. So I honestly, I've been trading 5 years. I'm not perfect, guys. Your trading psychology is going to be a continuous journey. Okay. So let's go on to actually what you're going to do about this. Okay. And what I have done about this over the years. First and foremost, your trading psychology and just your mindset in general will get better through education. The more you learn about the markets, the more you attend sessions like this, the more you study, okay? The more trades you take, right? Because that's all a learning curve too, the better your mindset is going to get. Okay, so you want to forever stay a student. In trading, you're never going to be like master know-it-all. Like it's just never going to happen. You're going to get better and better and better, but there's always something to learn, right? And there, especially with your trading psychology, there's always things that you can improve. Okay? Like with me, like I make money, but sometimes I'll be like, do foolish things and I'll go back. So then I have to make it back and then, but it's anyways, let me leave that. Okay? Personal development. Okay, this is something that has really helped my trading. It's just if you are growing just as a person, okay, just getting better, your attitude towards money is getting better, your discipline's getting better, your habits, like let's say with, maybe you have like the gym, dieting, if you're just genuinely growing as a person, then your trading is going to automatically be improved because your mindset in general is improving. Okay, so I've just put some of my favorites on the screen. The Strangest Secret by Earl Nightingale. I highly suggest every single one of you listen to. It's only 30 minutes. It is free on Spotify or YouTube, but it just talks about the power of the human mind, right? And the whole purpose of his audio, The Strangest Secret, okay, is let me not ruin it, okay, but it's meant to be like, the secret to success. If you can master this one thing, then you will see success in every aspect of your life. Okay, and it's all to do with the mind. And you'll be surprised once you start doing personal development if you haven't already. And again, I'm coming from a place of when I first got into the trading industry, I didn't do personal development. Like the only books I was reading was like, sci-fi fantasies. No, that's not true. Historical fiction, that's my favorite. Okay. But it wasn't anything that was making me better. It was stories that I could escape my reality, right? That's why a lot of people read as a way to escape, right? But once I switched to reading to better myself rather than to escape the crappy reality I had, things started to get better. Okay, Think and Grow Rich by Napoleon Hill is literally a manual to become wealthy. Okay, he interviewed over 100 millionaires and boiled it down into principles that every single one of them had in common in order to become wealthy. Okay, so highly, highly suggest that. Okay, anything by Jim Rohn, he is one of my favorites just because he's so fun to listen to. But honestly, anything. Go into YouTube and put like motivational morning music or motivational morning speeches. Like start to reprogram your thinking. And you're probably, maybe this is your first time ever being on a trading call and you're thinking, why is she's not even talking about trading? This right here is the most important, right? It really, really is. Okay, last two though, having clear trading rules. Okay, and I saw Florence put them earlier. Like if you lose three in a row, stop trading. Okay, because if you keep trading, it gets into revenge trading, you trying to make that money back. Okay, another trading rule would be like if you hit your target for the day, stop trading, right? If part of your trading plan is if I grow my account 3%, that's my goal, 3% a day, then if you're at 3.1%, don't take another trade, right? Don't risk giving money back to the market. Okay, so have very clear trading rules. I only risk 1 to 2% per trade. Okay, what does that mean? Well, I would have to lose 100 trades in a row at a 1% loss to blow my account. Okay, which just is not going to happen, right? Especially, with the signals that we have. It's just impossible. Okay, and lastly, having clear goals. Okay, so I'm going to come to this. This is going to be a very short exercise because we have Tommy, who is our mindset educator, kicking off 2026 with a mindset call on Monday. So if you're part of Primeverse, highly suggest you join that. Okay, but this is something I want you guys to do after this call. You don't need to spend a load of time. Okay, but it's so important. Number one, write down your goals. Don't just like think, oh, it'd be nice if I, made $500 this week or, oh, it'd be nice if I could get that, new car, but like you haven't actually like solidified what it is you want. Okay? So I want you to write down 10 financial goals. Okay? Set goals for other aspects of your life too, but let's just start with financial goals that you want to achieve in 2026, not just this month, like think the whole of 2026. Like if you plug in, if you are committed to your trading journey, by the end of this year, what do you want to achieve? Okay. And I'm going to show you some of mine because I very much believe like I'm not going to teach you something that I don't do. Okay. So first and foremost, these were my goals for 2022. So I actually sent this picture into my team group about 10 days ago when we did a goal setting call. Okay, these were my goals in 2026. This is my wall in my apartment. So those are like huge pieces of paper. Okay, and I think at that point I had about 70 goals. Okay, a previous mentor of mine said at the beginning of the year you should set 100 goals. Okay, sitting down to set 100 is hard. Okay, but you can see like I had it somewhere that I saw every single morning. Every single morning I got up, I saw my goals. Okay, but what you guys want to do, okay, what I would do as well is you want to be able to see your goals in as many places as possible. Okay. Okay, so I'd written down my goals. I put it on my wall. Okay, so you can see this is actually my goals for this year. Okay, so goals for 2026. My big goal is 100K per month by December 31st. Okay, it is done. Okay, in order to get there though, Okay, I need to get to 10K a month by March 31st. I need to get to 25K a month by June 30th. I need to get to 50K a month by October 1st. Okay, I break it down into quarters. Okay, so those are just one part of my financial goals for this year. Okay, so yes, it was, Brandon. Yes, it was. I gave you homework. What I want you to do as well, again, for those of you who are going to take this serious, if you think this is airy-fairy and like, faffy stuff, honestly, once you realize the spiritual side of success, you will take this more seriously. In 2022, and the reason why I shared that one, because in 2022 was the most money I'd ever made in this industry, but it was also the year I took my goal settings and my affirmations so serious. Like, had it up on my wall, read it every single day. Now, in that particular year, at my height, I was making almost $1,000 a day, right? I was laser focused. I knew exactly what I wanted. Okay, which is why this year I'm doing the same. I have everything written down. I'm waiting for that paper to arrive because I did order some and it was like this teeny weeny little, I couldn't fit all my goals. Okay, but what I've also ordered, okay, is a card, and I've put my order details because my team know that I ordered this, but it hasn't come yet. I'm so annoyed. Okay, but this is going to be a card. I've ordered two of them that I can carry everywhere. And this is what I did in 2022. I had a goal card. I'm so happy and grateful now that, and then I put what I wanted and a time. So on this goal card has, I'm so happy and grateful now that I'm making 100K a month by December 31st, 2026. And I'm going to carry that with me everywhere. So I want you guys to think at the end of this year, okay, what's this, maybe this big, hairy, gigantic goal that if trading hadn't come in your life would be like a far off fantasy, right? What is that? What are some things that you want? And it might be, I've got a lady in my team, one of her girls, she's a single mom, 5 kids, is to take her whole family to Disneyland for an entire week, right? Stay in the resort, like it's just an amazing goal. Right? What are other things? Do you want to buy a new car? Do you want to put a down payment on a new house? Right? Do you want to sack off your boss? Right? My biggest why when I first started this industry was to fire my boss. Very glad to say I got to do so. Okay? So write it down, put it out into the world, and if you focus on it, eventually it will come to pass. Right? Think of it like, if we're talking about a diet. Okay, if I am so focused on that diet, I'm focused on it every single day. I'm focused on what goes into my body. I'm focused on the work that I'm doing. I've got no choice but to, my body to change, right? The same thing goes for this. Okay, so let's keep going. Step two, okay, create a vision board. And it doesn't have to be exactly like one little piece of paper that you put on the wall. Okay, it could be the background of my phone is my vision board. It says 100K a month in the middle. Oh, you can't see it because it's blurred. Okay, find ways to constantly have these things on your mind. Okay, and lastly, and we're going to go through this quickly together, create a compounding plan. Okay, or some sort of trading plan. And this hopefully, okay, number one, it's going to help you track your trades, but hopefully it will help you stay disciplined. Okay, because every time you over leverage, every time you over trade and give money back to the market, you're effectively slowing the growth towards your goal. So every time you take a trade that you're not supposed to, you should be thinking, oh, shoot. Maybe I won't get that Disney holiday. I'm getting further away from that down payment. I'm getting further away from that new car. Okay, so if you have you're emotionally attached to your goals, it's going to help you stay on track. Okay, Florence, I ordered it on Etsy. I ordered it on Etsy. See, that's why I put that screenshot there. So just go to Etsy and put in personalized manifest affirmations or something like that, and it will pop up. Metal card. It's a metal card. Okay. So we're going to go through a compounding plan, but let's actually get to, right? With all of this, you're going to improve your mindset. You're going to have clear goals and a plan. How do we actually make money? That is why we're here. Okay, so the first thing we need to learn some terminologies here. And if you've been in Primeverse, you're seeing the trades come in, you're seeing how many pips are being collected. You're seeing how many, this, that, and the other. Okay, so let's go through it. So first and foremost, we make more money the more the market moves in the direction of our trade. So if we are taking a buy position, which means we want the market to move up, the more the market continues to move up, the more money we're going to make. Right? Same if we took a sell position. Sell means we want the market to go down. The more the market continues to go down, the more money we make. So this is calculated, that movement is calculated in something called pips. And pips are simply a unit of measurement in the market. So just like if I were to say I'm 182 centimeters tall, centimeter is a measurement of height, right? That is a unit of measurement. If I were shorter, it would be less. I'd be, whatever, 160, 100, whatever. Okay. Right? If I was taller, it would be more. Okay. So pips is just how we measure the movement of the market. Now, how much we make, okay, is based on the number of pips the market has moved. And this is the important part, how much we have risked per pip. Okay, this is called a lot size. So every time you take a trade, you're in control of the lot size that you take. Okay, so you need to decide what that lot size is, but you also need to understand with that lot size, how much are you risking? Okay, because not only is this going to affect how much we make, this can also affect how much you lose, right? Which is why understanding lot sizes is very important to your risk management. And you're going to hear me if you're, within my network, you're going to hear anyone, right, talk about risk management all the time. It's so important. Okay, so let's actually break this down. Okay, there are three different lot sizes. You've got micro lots, mini lots, and standard lots. Okay, so I've highlighted them in blue, right, with their value. So I'm going to talk that through. Okay, but I've put there like practicing good risk management is going to rely on your discipline, number one. Okay, and understand how much you would make or lose per trade. Before you even enter a trade, you should already know how much you would lose. Because if you don't know how much you would lose, you could be risking 50% of your account and not even know it. Okay, so I've put there, you should never risk more than 1 to 5%. I used to actually say 1 to 2%. But realistically, if you've got less than $500 in your account and you're trading gold, chances are you're risking up to 5. Okay. So 1 to 5%. Okay. If you have a bigger account though, if you've got like 5K, 10K, 20K in your account, 1 to 2, like I would even say 1% maximum, right? Because you're still going to make very, very good money and you're not risking any of your equity. Okay. So let's break that down. So a micro lot is the 0.01 is the smallest lot size. Okay, you can't take any smaller than that. And 0.01 means you are risking 10 cents. Okay, that's why I put 0.10. Okay, you're risking 10 cents per pip. Okay, 0.02 means you're risking 20 cents per pip. 0.03 would be 30 cents, so on and so forth, all the way up to 0.09, which would be 90 cents per pip. Okay, so what that means is every pip of movement, if I took a 0.01, it means I'm risking 10 cents. So if it goes, a pip into drawdown, I'm going to be down 10 cents. If it goes another pip, I'm going to be down 20. If it goes, so on and so forth. Okay, so let's actually, do an example. So if I used a 0.01 and it was a 50 pip stop loss, I'm using 50 pips specifically because the majority of the gold trades we are taking are between 40 to 60 pips. Okay, that's the stop loss. So you guys tell me, okay, if I took a 0.01, smallest possible lot size, it was a 50 pip stop loss, how much will I lose if this goes and hits my stop loss? Somebody tell me in the chat box. I'm not very good at math, so if you want to bust out your phone, I've even broken down how you would do it. 0.10 times 50. So how much would you lose? It doesn't matter. Doesn't matter what your account size is for, like, you could have $500 and take a full standard lot. That's just really bad risk management, right? So 0.01 you can use on any size account. You sh like let's say a standard lot. I mean, you shouldn't use that on a small account, but some people do. It's just really bad risk management, right? So nobody can do the maths on that one. There we go. Thank you. Okay, $5. So this goes, hits my stop loss. I'm gonna lose $5. Okay. So let me just come back here. I want to type this in. Where'd it go? Okay, I wanted to type that in. Okay, so $5. Now, I would say what the important part is here is not really the dollar amount. Okay, yes, obviously we all want to make money. That's why we're here. Okay, but there are two main rules when it comes to trading and when it comes to investing. And for those of you who follow these rules, you will go a lot farther. Number one rule, capital preservation. You should be thinking about protecting your money before you ever think about getting to number two, which is capital growth. Okay? So before you take that trade, you should know, okay, if this hits my stop loss, I'm losing $5. Okay, and you need to be okay with that, right? So, but if we think of percentages, okay, $5 is 1% of a $500 account. Okay, 1% of a $500 account, right? It would be 2% of a $250 account, right? This is why I say, like, especially if you've got an account smaller than $250, you're always going to be risking more than 2%. Okay. So it's important that you understand that. Now, this is going to take time. Don't be like stressed if you don't understand this right away, but it's important for you to know, like when you're taking trades and you're seeing the money go up and down, you want to know how that's being calculated. Okay. So let's say the trade is bigger. Okay. And we have a couple gold traders who are more kind of, they're trying to catch bigger moves. Okay. So the stop losses are bigger. So are the take profits. Okay. So by the way, if we had a 50 pip TP, we would make $5. Okay. So what if it's 100 pip stop loss? Okay. We're going to use the same lot size, 0.01, smallest lot size, but this time it's 100 pip SL. How much money am I going to lose? Good. $10. $10, £10, €10, whatever currency your account is in. Okay. Again, we think of percentages. Well, that's 1% of $1,000. That's 2% of $500. That's 10% of $100, right? So if you're starting with a $100 account and you see a gold trade come up that's 100 pips, you should probably give that one a miss, okay? Because if it goes and loses, and that's assuming you only take one entry, okay? And a lot of you are taking more than one entry, which is fine. And I'll teach you tomorrow, I'm going to teach you how many entries to take and what you should be doing, okay? But if you've only got $100 in your account and a trade comes up and you see that the stop loss says 100 pips, don't take it. Okay. And again, this is going to be part of good risk management because with the signal group we have and how many trades we have coming in, one of the biggest battles is not taking a trade. Like it's so tempting. Even if you've made so much money for the day, it's so tempting not to take another one. Okay. So this is where the risk management comes in. Okay. Now, I just want to show you just so you can see like, a lot of people think, okay, well, actually 0.01, what if I just for this once, let me just put it up a little. Like it's not going to make that big of a difference. Okay, but what if I inched it up to 0.05? Same trade as this first one. It has a 50 pip stop loss. Only this time, I'm risking 50 cents per pip and it's a 50 pip stop loss. How much would I lose then? Somebody tell me. There we go. 25. Okay, well, five times as much. I'm glad Kinga, you're good at math because I'm not very. I was counting on you guys to know that one because my brain is just right. So 25. And again, if you had that $500, that's 5% of your account. right? So the reason why I'm talking about losses more than I talk about wins is because the losses, number one, the losses are what teaches you, right? You could come in tomorrow and you could over leverage and make lots of money. That's probably the worst thing that can happen to you because Brandon said it earlier, it makes you cocky. You think, shit, I made $200 today. You made it the wrong way though. You over leveraged. Over leverage means your lot size was too big for your account. Now, what happens if you use that same lot size on the next trade and it loses? Boom. You're wiping out a lot of those profits, if not more so. Okay? So, the reason why I wanted to show you that, okay, is because I'm now going to show you the results from our Telegram group and you guys are going to tell me how much we would have made. Okay? But first, very quickly, that was micro lots. I didn't talk about mini lots. Reason why I didn't talk about mini lots is because I would say you need to have at least like minimum like 1,000, probably more than that, but minimum 1,000 in your account before you start touching mini lots. Okay, because mini lots you're now risking 0.10 is $1 per pip. Okay, so if you're now risking $1, that 50 pip SL is now a $50 loss. Okay. 0.20 is $2, $3, so on and so forth. Okay, so moving up to mini lots means you've got a pretty decent size account now. Okay, and then standard lots, I mean, you shouldn't even touch unless you've got like 10K plus. Because standard lots, which is 1.0 up to infinite, right? 1, 2, it could be 10, 20, 100, okay, is now $10 per pip. So 1.0 is $10. Again, that same 50 pip stop loss, it could be the exact same trade. Okay, you then lose $500 in that exact same trade. Okay, so this is why when people, it actually drop a one in the chat box if you have anyone ever heard anyone say Forex is a scam. Forex is a scam. You're going to lose all your money. What are you doing with that nonsense? Rah, rah, rah. Right? Who has ever told you they lost a lot of money and they blamed the markets? No, is there nobody? I feel like my thing is lagging here. ChatGPT also told you it was no way. That's all. Brandon, I don't believe you. Okay, so a lot of us. Okay, that person who told you Forex is a scam or they blew your account or they blew their accounts, but they blamed the markets or they blamed trading, they blew their account because they're an idiot. They blew their account because they didn't know either they were just so willfully ignorant they didn't know what a lot size was and they genuinely didn't know, how much they were risking, but chances are they knew, they just didn't give a toss because if it was reverse and they won a whole bunch of money in that trade, oh, Forex is amazing. Okay. But if they blew their account, chances are they were massively over trading. Yes, gambling. That's exactly it, right? That's exactly what they were doing. So let's look at, let's look at a trade. Okay. So this is one of our gold signals. Okay, that we had. I think it was on Friday. I went to like the most recent one. Okay, so I want you guys to tell me. Okay, you can see here, we're actually super lucky. I've been around the block. I've seen a lot of different signal channels, and they don't tell you how many pips things are. So you're kind of as a newbie trying to work it out for yourself. Okay, so if you look, you can see TP1 is going to be 30 pips, TP2 60 pips, so on and so forth. But the stop loss, this is what you guys should focus on first. Don't even pay attention to the take profits. Focus on the stop loss. Okay, this stop loss is 60 pips. So if I took, I'm going to type it in the chat box, if I took a 0.01 lot size, how much would I lose if this goes and hits my stop loss? Yes, Kinga, it definitely does, but that's only after you already taken the trade, right? So let's say you accidentally took one that's too big and it kind of goes the wrong direction. You're probably going to panic because you can only see it after you've taken it, which I'm going to talk about that too tomorrow because that is also really, really, Saves you a lot of time. But somebody tell me. So this stop loss is 60 pips. I took a 0.01. How much will I lose? Okay, who was taking notes? You remember how much a micro lot 0.01 is worth? Okay, yes, Lindsay, $6, right? 10 cents per pip. Okay, so what people normally do is they will take more than one entry. Okay, if you have, 250, $500 in your account, okay, you can take more than one entry so that you have the possibility of holding the trade longer. Okay, so what I teach my team to do is to take three entries. Okay, your first entry always come out at TP1, like bag your money. Okay, because 9 times out of 10, it's gonna at least hit TP1. Okay, now, luckily, again, our Telegram also tells us, okay, when it hits TP1, you should then, if you've got more trades still open, move your stop loss to break even. Okay, now what time is it? I'm probably not going to have time today. We'll cover this tomorrow. I'm going to do a full, like, this is how you take the signals, this is how many entries, this is how to move your stop loss to break even. So we are going to do all of that. Okay, but if I've taken three entries, okay, at a 0.01, I'm not just going to lose $6, I'm going to lose $18 if it hits my stop loss. Okay, but if I take money out at TP1, for example, if I take money out at TP2, that's 90 pips, which is $9. And then if I leave the third trade running all the way to TP5, how much would TP5 make you at 0.01? It did 700. Okay, sorry, if it did. I don't know if this trade did. I can't remember. But if it went and hit TP5 and did 730 pips, how much money would we make in that one trade? $73. $73. This is why it's really important to consider the risk to reward. You don't want to just only hold to TP1 all the time because TP1, you're making less than what the stop loss is. This is why I teach my team to take three entries because if they come out at TP1, TP2, and then hold for as long as possible, and one of those trades, even if it comes out at TP3, they've still banked 190 pips. Right? If it comes out at TP4, they've still banked 290 pips. Okay, I'll go through that in more detail. Okay, so this week's results. Okay, this was from this week starting on Sunday. We were sent 96 trades. 76 of those were wins, 13 were losses, 3 were break even. Brandon, I wouldn't do, it depends how big your account is now, but if it's 1,000 plus, if you're still only taking 0.01s, then that could be acceptable. Okay. But I wouldn't personally do all five, depending on how big your account is. So the total pips was 9,804. Just at a 0.01, how much money would you have made? Just a 0.01. 9,804 pips. Who's a mathematician? Nobody? Nobody? There we go. $980. Without over leveraging, you just stuck to your 0.0. Look at guys, I know 0.01, it's not sexy. It's a micro lot. It's 10 cents per pip, right? And especially as you start trading, the biggest thing you're going to want to do is, oh, let me up my lot size. You don't have to. That $980. Now, again, the reality is you haven't taken every single one of those trades. Some of like maybe you like unluckily in one day you ended up catching more of the losing ones. Let's say you even only caught a quarter of that, right? I'm going to round it up to 1,000 because I'm not very good at math. But even if you only caught a quarter, that's still like $250 from copying some numbers, taking the lowest risk possible. You don't have to over leverage in trading to make money. You don't have to. You don't have to take too many entries. You don't have to over risk. When you have a win rate of 85% this week, okay, if you knew what you were doing, there is absolutely no way you should not be profitable. And if you're not profitable, and that would, yes, Brandon, that's just taking one entry. Great point. Okay, great point. Could have potentially made more, right? If you are not profitable this week, I'm going to come right back to our very first conversation. If you were not profitable this week, it's because of this. It's because of your trading psychology. It's because you jumped into trades that you weren't supposed to. Maybe you took a loss, so you decided, "Oh, let me just see if I can scalp it back." Drop a two if you've ever done that. If you lost a trade and you thought, "Oh, let me let me just scalp that back to make some back." Honestly, I've done it too. I'm saying this because I know because I've done it. Okay. So again, we're gonna wrap this up because I've got like tomorrow we're gonna then go through. Okay, let me just keep coming back here. Okay, Bethany. Let me come back actually to that slide. Bethany, this is what I would do to better that. Because, and it's such a good point because when you first started trading, I think Kinga, I think we had this conversation. When you first started trading, right? It's going to be a roller coaster of emotions. I don't know what it is when it comes to money. You could be the most sensible, calm, like disciplined person in so many other aspects of your life. But when money starts to be involved, even if it's a dollar, when I first started trading 5 years ago, I did something called binary options trading. And I was super low risk. I was literally only risking like 1 pound, right? 1 pound. And if I lost, like I'd be like devastated. But then if I won a couple in a row, I'd be like over the moon, all in the space of like 10 minutes. Okay. So Bethany, if that's you right now, or if it's anyone, you're not alone. Like I think it's just human nature. Okay. How you're going to improve that is these three things. Okay. Education. The more you learn about the markets, okay, actually, one book I should have put on here is Trading in the Zone by Mark Douglas. The more you understand that the market is just about finding your edge, right? It's just about, you know, I'm trying to think of his five principles. It's been a while since I read it. But just understanding that anything can happen in the market at any time. You might have an A plus setup and you think there is absolutely no way that this trade is going to lose, and then you lose, right? Knowing that that can happen. Okay. So the more you educate, attend, I see Donnie on here, right? Shout out to Donnie. Okay, he's the amazing person who brought me into Primeverse. Okay, so getting onto Donnie's live sessions, okay, learning more about like the economic side, like learning a bit more about news, how that affects the markets. Like there's so many factors, okay, to how this industry, not even this industry, to how the markets work. The more you understand that, the more you can look at a loss not as a loss, but as a lesson. Okay, if I lost here, okay, why? Okay, and I don't want to see people blaming the signal providers. Okay, they are people too who've done the hard work. They're doing the analysis and they're sending you trades so that you can make money. They're gonna lose sometimes because even they aren't can't win 100%. It's impossible in the markets. Okay, so the more you educate, the more you develop yourself as a person, it's going to become, when I started learning how to trade, I was I was teaching, right? So I was in a very negative environment, but didn't even know it, right? Everything I spoke about was like, oh, like the kids are being bad, or the leadership sucks, or my workload is terrible. I never have time for myself. And what did I do? On a Friday, the first thing I did, I went to the pub with all the other teachers, blow off steam. So like the cycle I was in, not really conducive to growing, wealth. Right? Because as soon as I, worked hard for my money, I was going out spending my money on just stuff that was not necessary. But as soon as I started developing, that's when I actually was like, okay, actually, I need to be starting to invest. I'm putting money into crypto, putting money into stocks, doing all these kind of things. So the more you develop yourself as a person, you read books like, Atomic Habits is a great one, Psychology of Money is another great one. Okay, and I hear my son crying. He stayed napping this whole time, though. I'm pretty impressed. Okay, so I'm gonna have to wrap up. Okay. But Bethany, hopefully that answers your question, right? So the more you learn, I mean, information changes your situation. That's the quote. Okay? So the more you learn, the more you develop, okay? The more you stick to your rules, the better your psychology is going to become. Okay? So, guys, I'm going to end there. We have day two at the same time tomorrow. So, tomorrow, I'm going to dissect our signals, okay? How you can be taking them safely. I'm going to show you on MetaTrader 5 how to move your stop loss to break even, okay? If you're setting multiple TPs, right? How to do all of that stuff. I'm going to show you honestly, my favorite part about Primeverse, yes, the signals, because obviously we all want to make money, but the trading journal Oracle. Listen, it is a teacher's dream. Okay, so I'm going to show you how to use that so you can track your trades and hopefully that will also keep you on track. Okay, so we've got a lot coming tomorrow. So guys, hopefully you have got some value from this session, right? If you're already in Primeverse, you've already got a taste of how amazing it is. If you're on here as a guest, right? Definitely tune in tomorrow or get back to the person who invited you on here so you can become a part of this. It is free, right? We don't get paid to be here, okay? So you can become a part of this too. All right, guys. So hope you have a phenomenal evening. Okay, he's proper having a meltdown now, so I'm gonna have to go. I'll talk to you guys soon. Take care. Bye.